Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday. Hope you guys are doing fantastic. And I got my Colorado Rockies ball cap on here because it's Friday and it's the home opener. So it looks like spring is under full wave with the start of baseball. And we're looking forward to a great spring and a great summer in terms of interest rates and the housing market. Now, it was a very weak or light week in terms of economic data that was released. Rates finished the week about unchanged from where they ended last week. You know, we've seen some pretty good improvement here over the last couple of weeks. There was very little economic data released. There was just the ISM, which is a manufacturing index, and that came in slightly higher than expected, but no real big surprises there. We also did see weekly jobless claims come in a little bit better than the market expected, with fewer people filing for unemployment, so that was good news, but it didn't really cause any major movements in terms of interest rates. The big news of the week was actually the Federal Reserve minutes were released this week, and everybody was wanting to see what the Fed was thinking and kind of peel the onion back and see what these notes said. And here's what they said. They basically said that while the Federal Reserve does see signs of inflation and good jobs numbers, they're just very concerned about the global headwinds that we're going to face due to the rest of the world basically having some economic concerns. So the bottom line is the Federal Reserve does these charts and they basically predicted that there's virtually a 0% chance of a Federal Reserve hike coming this month later when they meet in April, and only a 22% chance that the Federal Reserve will increase credit in June. So what this sets up is that it's very likely that we're going to see, if any, further Federal Reserve increases this year unless things just really dramatically change. Because after June, we're getting closer to the election time, and the Federal Reserve traditionally has stayed on their heels. They don't want to influence the election or have anything crazy happening. So most believe that if the Fed does not do anything by June, then they just might, or maybe July, they just might sit back on their hands unless there's just a lot of inflation concerns and if the economy really shows major signs of increasing. But due to these global geopolitical or global economic concerns, the Federal Reserve just doesn't want to do anything to hurt the economy, because if they increase credit, it will strengthen our dollar even further, make our goods and services out of the country less competitive, and they don't want to hurt the economy. So we're setting up for, again, just another good year of interest rates. Rates will continue to be probably very good through the end of this summer here. So just get out there and tell your clients that, these rates will be good, and get out there looking. So that's what's going on. Hope you guys have a wonderful weekend and Friday. If you're going to the game, have a wonderful time. And right now, though, the global economy, just as my title says, is just not playing ball with what the Federal Reserve really wants to do. So we'll see how things will change, and we'll always keep you informed. Have a great weekend, and we'll talk to you soon. Bye-bye.